For another update. Let's take a look at ARPA chain over here. And with ARPA chain, what we have is a 5-wave move to the upside in the March 2020 bull market. We have what's called a leading diagonal. So you see how the waves are overlapping each other with a 3-wave move within each of the waves, hitting your gold, topping out at your golden pocket with Bitcoin, and then coming down for a wave 2 or B wave correction in the form of a triple zigzag. Then what we did was we bottomed out here at the 50% fib and formed over 700 days of accumulation in this Wyckoff schematic. Time versus price does matter. I just want to let you guys know. We had a 5, and then for our, now what we're doing is we're starting our C wave to the upside. Now this will be the last wave before we have a nasty crash below this macro channel that we have forming over here. Okay, so this over here is a channel, and it's likely we're going to reach the top of this channel before we come crashing down for our bear market. So we're currently within the C wave over here. We're still grinding out this third wave. What we have over here is a 5-wave move to the upside for your wave 1. You then have a B, C correction for your wave 2. Now we're within our wave 3. Now our wave 3 is going to be the longest wave, or the largest wave, so it's going to take a little bit of time. So this over here would be your leading diagonal. So this is your wave 1, 2, 3, 4, 5. Notice how the waves are overlapping each other, very similar to this structure over here. But this is a leading diagonal for your subwave 1 of 3. So then if we zoom in here on the 4-hour time frame, what do we see over here? We see a falling wedge, okay? Falling wedge coming down to the 100% fib and the 70.2% fib measured from this very low over here up to this high. Now, if Bitcoin continues to go down here, then it's likely that ARPA will come down to the 78.6% fib at 0.05379 and then quickly get bought up from there. Now, if it did come down to the 786, that would be a wave 5 overthrow of this wedge pattern that we have over here, this falling wedge. Okay, now remember, like I said in my previous videos, retail traders, they love using trend lines, right? So they're longing this right over here, right? Thinking we're gonna have a nice breakout, and you know what? We may have that breakout over here as long as Bitcoin finds its footing over here. But if Bitcoin continues to go down and the total altcoin market cap, then it's likely we'll have one little wave down here towards the 78.6% fib for your wave 5 overthrow, and then see a very nice pop up there for a wave 3 of 3. Our wave 3 of 3 would likely take you around 2 to 2.5 standard deviations measured from this sweep over here, right? This sweep over here up to this high, so around 2 to 2.5 standard deviations at around 30 to 36 cent, which would also be your 1.236 and your 1.382 measured from in order to find your wave 3 measurement in relation to your wave 1 and 2. Okay, so it's either this is the bottom over here, or this is the bottom over here, and it comes up to the 1.382 here. Okay, so it would likely come and hit your 2.5 standard deviations, which is also your 61.8% fib. When we take a trend-based fib from this low up to this high and down to the counter trend, you see this 61.8% fib over here? That's 37 cent, which is right there at 2.5 standard deviations. Okay, so around 30 to 36 cent is where I would expect a little bit of a pullback for your subwave 4, come down 23 to 38.2% of the way, and then have a quick wave 5 up to the golden pocket, or up to 4 standard deviations, which is around 50 cent. Okay, and it would also be around the 70.2% fib, like I said, measured from this low up to this high and down to this low. Okay, so we would likely come up to 50 cent for your wave 3 high. Now, once you take out this buy side liquidity, you're likely going to see a little bit of a throwback, and that's That's expected, right? So whenever you have a high, okay, what you're going to see is a move to the downside. So this is your high, right? Then you come down, and then you come and tap that, and then have a throwback, and then continue higher from there. So this is what's called our buy side liquidity. And this is exactly what we see. Once you sweep this buy side liquidity at your previous high at 0.28, we would likely come and tap 2 to 2.5 standard deviations, come for a little bit of a throwback, right? 23 to 38.2% of the way, measured from this expected low up to this expected high, and then for our wave 4, and then come up for a quick wave 5 for our 50 cent towards the 50 cent region. Then you would have a wave 4, right? Likely to around the 50%. And then just to finish it all off, we'll have our macro 5th wave of our C wave coming to the top of this channel right over here. Okay, you see this channel that we have forming here for a very long time? Okay, and then this over here is your median. Okay, so that's your median right there. And yeah, so this is ARPA. Okay, nothing to worry about. When we zoom in over here on the 30-minute time frame, what we see over here is a 3-wave move to the downside, 3-wave move to the upside, and a 5-wave move to the downside to complete your C wave, right? Now this C wave could be in over here, right? This C wave could be in, but remember, Bitcoin is king for now, right? We follow the trajectory of Bitcoin, and more importantly, Total 3, right over here. Okay, so this is the total altcoin market cap. Bulls will definitely want to see this level hold, otherwise we will come down and sweep this wave 3 low, come down for a wave 5 of C before we continue up from there. Okay, so this is ARPA over here. It is printing a falling wedge. Falling wedges are bullish. Don't be surprised if we have what's called a wave 5 overthrow of this wedge and then pick up from there. Watch out for bullish divergence from this low down to this low, that from this wave 3, this subwave 3 low down to this subwave 5 low that it's creating right now. Okay, so it looks something like this. So I am still bullish on ARPA, and I definitely do think 50 cent to $1.20 is in the cards. I do think $1.20 will get hit, because this is the top of our channel right here. I do think we're going to have a blow off top before a crash. We can't have a crash at the lows. We're likely always going to have it at the highs. Remember that. Remember, you have accumulation at the lows, not distribution. So if we take a look at ARPA on this historical chart that I have here, what do we see over here? We see perfect Wyckoff accumulation. Okay, this over here is your selling climax, right? This is when everyone sells their bags. You then have an automatic rally to the upside, a secondary test, a failed breakout of the range, a secondary test in phase B going below this psychological support. This causes a short squeeze, causing the price to get prompted to the top of the range, right? You have your failed break number 2, your creek to the downside, which is your last point of support. Last point of support, price gets squeezed into your sign of strength, right? This is when all this is now I'm looking online, and I'm trying to gauge the sentiment of trying to gauge the sentiment of ARPA when it was over here. And when we had this sign of strength phase, this is pretty much the only time people were really talking about ARPA. This is when the composite operator brought the price back down to the 78.6% fib, right? Measured from this low up to this high. Okay, you see how we perfectly came down to that 786? You see that? exactly like XRP. And now what we're seeing is the price is trending up. Okay, this over here was your sign of strength. This was your backup phase, and now we're seeing continuation higher to continue this parabola. So just remember, all of these moves in this range for over 700 days are not random. This is the composite operator loading up shares so they can dump it at the given targets, at the highs, I should say. So this is ARPA. I hope you guys enjoyed the ARPA video. If you have any questions, please feel free to let me know. Peace out and take it easy. See you in the next one.